Hey, everybody. Good morning. Good morning. Happy Monday to you. Welcome. Thank you for tuning in. I want to keep revisiting our thoughts on these valuations, which we talked about last week, in particular gold. It's coming down from its high, all right, as I'm recording this. A little bit in the green again today, but it's still down from 10 12 days ago, from the high of 4,300 43.55 per ounce. And we're gonna have to see. There's a weekly chart back to 1971. Very simply, you got to look at things at the trend. All right, that's how you measure growth, not what did the trailing 12 months do. Of course, short-term trends help, but if you want to understand the long-term supply demand dynamics for an asset, i.e., the price, you got to look longer than a couple weeks. This is what gold has done in the free float era. Right? We are clearly at an all-time high, just off it. Right? I'm stretching these bands as far as they can stretch, as far as where the price was at any given time and where the relative to the trend, based on a multiple. How far has the price stretched over the trend at the time? Okay, so the trend right now is this. It's the all-time trend. In the past, it was kind of like snaking itself out. It was between it was uncoiling, figuring out where it was going to be. It was between these red lines. All right, so I could show you the evolving trend, whatever, but just very simply, this is the long-term all-time trend. 5.3% CAGR per year. This is Peter Schiff's time to shine. But I'm going to the extreme with these red bands. Okay, so if gold starts to take out prior highs relative to the trend, it needs to be above the red bands. We haven't done it yet. It needs to go 2.54x the trend. All right, and then for fun, as I've been showing us last week, showing you and myself, for fun, let's look at the very short-term trend over the last 2 years. What has it done? It's been going absolutely gangbusters, 41.2% per year from this point, which is not completely the down week, but I actually needed to do that for weekly, whatever, doesn't really matter. 40 plus to 41% roughly on this weekly frequency. So if we look at the short-term trend versus the long-term trend, gold, if it keeps up, will break a new relative high as I'm looking at it, all right, relative to the all-time trend a year from now. So it could very well run. Geopolitically, things seem unstable. Central banks still buying gold. Could definitely run. Remember, in prior videos, I was showing the 97th and a half, kind of like the 2 sigma trend. Now I'm going to the 5 sigma. I mean, this isn't in sigma terms, it's in percentiles, so it's literally all the data. This is where we could be. Now, do I think that this could happen? Possibly. Do I think that it'll keep going on this trend? No, I don't. Statistically, this would be very odd relative to what gold has done in the last 50 years. But let's still embrace this Peter Schiff idea. And we'll come to Bitcoin in a second here, but let's embrace the short-term trend and let's see how it can affect other things. Okay, so here's official gold holdings. All right, official gold holdings. Same idea, but it's looking at all of the, since the 70s, all of the holdings of central banks that hold gold measured in dollar terms. So obviously it looks very similar. All right, back in the January, February high in the 80s, early 80s, 1980, they got to $750 billion worth of gold. That fell as low as 282, which was when Gordon Brown decided to sell the UK's gold. 2011 pricked a high, actually, like reset the high, but it didn't stay there. Now, this is a key thing to think about. It didn't stay. Just like in 1980, it doesn't stay. You know, it breaks the high, but then it doesn't stay there. It's just like Bitcoin. Same thing in 2011. It didn't stay, fell back to the trend. We're going to see what happens. Okay. These are measured in billions now, really. We're at trillions, but just to show you. Okay, so where are we today? This is as of July. It's the last best data, and I'm taking this mostly from World Gold Council at the moment, but also from some research that was done independently by an Australian gold bug named Nick Laird. $3.8 trillion is the value of gold holdings as of July. It's going to be even higher last couple of months because the price went up even more. But let's just stick with this trend. Let's do a short-term trend now. All right. CAGR's 31.8%. And we'll even pop this in April if we stay on this trend. Okay, at about $5 trillion. Yeah, $4.9 trillion. Let's assume the absurd happens, though, and we keep just rising. And we'll come back to this. But think about Bitcoin. I've said many times that based on the power curve, based on the way Bitcoin grows, probably by early 2040s is when it's going to match world-based money, the central bank balance sheet outstanding worldwide, somewhere actually around that magical $100 trillion mark, indeed, early 2040s. Look at the value of gold holdings by all central banks around the world if the gold price continued at this trend. By 2040. $500 trillion. This is where supply demand is just going to show you the silliness of it. Bitcoin is not constrained by supply elasticity because it's completely an elastic curve. So, Bitcoin, due to the difficulty adjustment, the same amount of Bitcoins are going to come out every 10 minutes. Everybody knows that. It's predictable. You could argue that's not even inflation. It's just baked into the system, sort of issuance of new Bitcoins. With gold, once you start to see what we saw here, all right, this sort of exponential rise from the trend, instead of getting 5% CAGR, the gold industry's gotten 41% CAGR over the last 2 years. Other people come into the market. New gold bugs, old gold bugs, new mines, old mines that weren't profitable at lower prices are reopened. More gold is going to be mined relative to before. And as they say, high prices is usually the cure for high prices if you're a consumer. So eventually the price will come down due to the excess supply and excess competition. Probably some jokers in the market as well. Don't really know what they're doing. Going to go bankrupt. That's how it works. So it seems very unlikely that the trend will be so stretched like this to offer something like a $500 trillion valuation to central bank gold holdings by 2040. All right. It could go on for the short term, but this shows the absurdity of these numbers. That's what I want to keep showing you, the absurd. Like, maybe they get to 10 trillion by 2028. That seems reasonable. But at that point, are they going to revert back to this mean? That is this mean here? Or maybe they'll set in a little bit of a higher mean overall. Maybe the CAGR isn't 4.9% on this official gold holdings curve, but goes to 6%. All of that is reasonable. This is not reasonable. Peter Schiff would probably lie to you and say this could happen. It doesn't happen in markets. All right, now let's look at the U.S. Let's look at the U.S. So no one knows. Well, we do know how much gold is in the U.S., but the U.S. doesn't market to market. They still market back at $42 an ounce, which was the old statutory rate before the gold system, the Bretton Woods system, collapsed. The reason they do that is they leave room for more treasuries on the Fed's balance sheet. So this is the theoretical value of the gold that the U.S. holds if they marked it to market. And then there's also a lot of people like GATA, which say that they might not even hold that much because, as Alan Greenspan said in the 90s, central banks stand ready to sell gold should the price rise. The price has risen. Theoretically, they would have made good on this promise. All of their holdings have been increasing since 2008. GATA says there are a lot of central banks, particularly the U.S. version, that hold gold both as a receivable and as an asset on their balance sheet in one line item. I'm not an expert on all the details there, but that's what they say. It's possible. No one's audited Fort Knox since the 50s, since the Eisenhower administration. Who knows? Nonetheless, let's just, again, play the silly chart and see how this would work. And again, theoretically value the U.S.'s gold if it went to the Peter Schiff chart. So notice again, same deal, just like with the gold price. We aren't even at the 100th percentile of the long-term trends. We're actually still in, we're definitely in an elevated range. We're not on trend, but we haven't gotten outside of the trend of the last 50 years, let's say. How long is that going to take to get outside of it? Pretty soon, again. All right. Looks like September. Looks like about a year from now. Unlike this chart, which is all the central banks in the world, in this chart in the U.S., the U.S. doesn't buy gold, just holds the same amount of gold every quarter, every month, every year. And the value just changes from the price. So, but anyway, let's run this out now. So if the U.S. has the gold that it says it has, and if the price continues to rise by, this is official gold. U.S. again, U.S. So right now it's $860 billion worth of gold that the United States has. $860 billion worth. Not even a trillion, but that's a good chunk of change. A lot of us would like to see them buy Bitcoin. I think the Loomis bill offered opportunities to mark this to market, then swap it into Bitcoin. If we just stay on the trend, as I said, by a year from now, we'll get to the top end of this trend. That's $1.3 trillion. $1.3 trillion worth. And then let's start just expanding this out to that 2040 date. All right. So let's also keep in mind U.S. debt is $38 trillion at the moment. But let's just keep this idea going. So by 2030, the U.S. gold could be valued at $3.8 trillion. Is that possible? Possible. Seems normal. But because of the power of compounding at a 37.2% CAGR, which is what would happen if the U.S. keeps its gold fixed and the price rises, this CAGR could get us to $100 trillion American gold valued holdings by 2040. 100 trillion. Let's now look at this chart, which is Bitcoin versus major assets. Here's the treasuries versus Bitcoin. Okay, remember, Bitcoin's a power curve, nice, beautiful curve. Treasuries are an exponential curve, nice straight line. It's just how it works. Treasuries are growing since 2008, the life of Bitcoin, at a 7.5% CAGR. All right, so you don't have to be a math whiz to understand that compared to what I just showed you, a 38% CAGR, gold's going to catch up much faster. I don't have the U.S. holdings on this chart, but let's just look at the treasuries. All right, so we're going to catch up to our 2040. It's actually with the treasuries closer to 2041. Still, we're about 100 trillion, as you see. 2041, 104 trillion for Bitcoin, 106 trillion for treasuries. So Bitcoin would catch it right there, March 2041. Okay. Assuming the growth rates remain. Nothing is out of the ordinary there, in fact. A lot of news headlines, a lot of Federal Reserve statements, interest rates cuts, interest rate rises, continued deficit spending. Both of these are totally possible. What does not seem that possible is that the gold holdings of the United States would reach that amount just by doing nothing. Whoops, that's not what I want to show you yet. So just by doing nothing, the gold holdings would also reach 100 trillion at this time. HODL is a good strategy. Buy and hold is a good strategy, for sure. It's possible that by 2040, the world goes through some major revaluation of currencies. Maybe the U.S. admits, hey, we're going to put some more gold and Bitcoin on a balance sheet. Maybe things change a little bit. What is not possible is if this trend line, due to the same old supply demand characteristics of gold, were to continue like this, you would have literally every, what's the word? Bob, Mary, and who else, mining gold, that the price simply will not be sustainable at that rate. There'll be so much competition for gold to take advantage of that, that first mover advantage of these higher prices, that the price will have to come down. And relative to the trend, it always has. It's absolutely true that gold is much slower moving than, say, Bitcoin, right? Again, if you were a gold bug right here, you would have thought that you had won the world. Literally, you guys were kings, The gold bug newsletters were doing great. And then you sold 20 years worth of newsletters while gold went into a 20-year bear. Would have been better to be in stocks at that time. You have to look at these things to, and by the way, I'm not saying that happens to Bitcoin, but you should look at the long-term trend to be prepared of what could happen. I think Bitcoin is way earlier in the growth phase relative to everything else, relative to its value, relative to gold. That's highly unlikely, but we should certainly think about it's possible. Bitcoin could go into a 20-year bear like that. And then likewise, from 2000 to now, it's had a great growth run, but it hasn't been a straight line. All right. We went up straight for 11 years, then sideways basically for like 8 years or 9 years. So due to the supply demand factors, due to the trend itself, which is a clear signal of those supply demand factors, I would say the chance of the United States gold holdings reaching the value of the United States Treasury market by 2040 is highly unlikely. That's just the holdings of the United States. All right, what would the holdings of all central banks by 2040 be? All central banks. 500 trillion. Yeah, 500 trillion. We talked about this. And I have this for all available gold, by the way, which I don't think I have pulled up. Let me pull it up. One second. You're going to get an even more absurd number there. So, look, this can go up, I think, for a while. In the short term, I think this could pierce through this. I think this could go up for a year after this. But at some point, demand will catch up with supply, and people are going to wonder why they're paying these prices for the same yellow rock. Here is the total market cap of available gold. All right, this does not include industrial gold. So again, similar looking chart, very responsive to the gold price. $24 trillion now is the gold market. All right, all the bullion, coins, bars, jewelry that is out there, roughly estimated. All right. Let's assume it also goes on to this Peter Schiff trend out to 2040. This is the funniest one. All right. $3.8 quadrillion. 3.8 million billion. This is where it really helps to do these regressions and just sort of make sense of the numbers. You know, no one's going to be in any other market. They're just going to be mining gold. It's going to be such a great market. So I hope I've been able to, again, gold could go up for another year. I have no idea. What I'm trying to do is, put these things in perspective of the long term, which is here. And, we are no doubt in a gold summer, for sure. I mean, Donald Trump loves gold. Everybody loves gold right now. I have no problem with gold, by the way. But relative to the trend, relative to what the supply-demand characteristics of the market suggest, the Peter Schiff trend can't go on forever. It's too wacky. I'm trying to, juice this for fun and to see how, for example, how quickly the U.S.'s gold holdings could take it to the value of its debt. And by the way, it turns out to be the same 100 trillion, which is kind of interesting. Right? So let's go here again. Yeah, they meet about in 2040 at 100 trillion. But it doesn't make any sense. The United States can do whatever it wants with the budget and just hold a little bit of gold and it will somehow cancel everything else out. Seems a bit far-fetched. All right, let's look at some other markets. I wanted to look at top tech stocks. So these are tech titans, as I'm talking about, as I'm labeling them. Good morning, MM. Nice initials. I don't know about platinum at the moment. Platinum was a dog for recent years compared to palladium. Finally caught back, but I don't have I don't have any charts at the moment. I'll look at it though. I'll look at it. I want to talk about the AI bubble as well. Okay, I don't have all the trend lines here created, but we'll get there. So this is just an alphabetical alphabetical order the top 8 tech stocks. All right. Apple is market cap. All right. So Apple here, we're at $4 trillion. That's bigger than Bitcoin. There are 5 stocks on this list that are bigger than Bitcoin still. Or 4. Let's see. Amazon, bigger than Bitcoin at the moment. Broadcom, this people wouldn't really hear about, but it's a semiconductor company doing quite well with the AI boom. All right, this is just alphabetical, $1.8 trillion market cap. Google, Alphabet, $3.4 trillion market cap, bigger than Bitcoin. Meta, 1.7, Bitcoin is bigger. Trillion. Microsoft, booming from AI investment, 3.8 trillion. NVIDIA, a huge outperformer, obviously, and maker of those chips, which everybody wants. 5 trillion. It hit 5 trillion. It's the first company to $5 trillion market cap. I can show you. I think it was last Wednesday. And Oracle, not much there, actually, surprisingly low. You know, Larry Ellison, though, gets super rich off this. So these are the top 8 stocks. So Oracle's under $1 trillion. Put the total there just to play with this a little bit, because it's kind of fun. Top 8 are at $23.2 trillion market cap. And look at this craziness. So here, for example, as the silly season was kind of, meme stocks had peaked, and then people realized they still had to lay off workers. People weren't coming back to work. People didn't want to work. They didn't want to go into work. We went from 11.3 trillion at the end of 2021 all the way down to 6.6. Now look at that good number, 6.66 trillion. Nearly a 50% drop. I didn't actually know the scale of this. Bitcoin went down here, by the way, as well, same time. And then the boom started. ChatGPT was released, I guess, right around here. From 6 up 3x in 2 years, 23 to 24. Unbelievable. And then a big dip here. This was really remarkable too, right? This is our, what was it called? Freedom Day in April. The Trump tariffs destroyed everything for a moment, and then back up again. Really wild, really volatile. Really wild to see. Good morning, Gio. Good morning. Let's look at NVIDIA on its own. So, you know, before anybody really knew that their chips would be in such huge demand, 350 billion. Then it went to the world's most valuable company ever right there. $5 trillion last Wednesday. Remarkable. Just under as of Halloween. So on its own, it's NVIDIA, Microsoft, Google, Amazon, and Apple at the moment are bigger than Bitcoin. What is Bitcoin exactly? So I can tell you. I know I could have it on this chart, but it's 2.14 trillion at the moment. So there's only these 5 stocks that are bigger than Bitcoin. We also have Saudi Aramco, or Saudi Arabian Oil, whatever it's called now. That's bigger, but that doesn't trade. Ah, yes, Liberation Day. Thank you, Gio. Always saving me. Liberation Day. Really incredible, this drop. I remember, I mean, we talked about this a lot on the channel. The treasury market was not doing what Besant wanted. What a drop. I mean, in a matter, like Trump was elected here. You're going to 18.5 right here, 18.5, 18.6 trillion for all the top eight. The down basically a third, almost a third, and then recovered. The market is certainly better than what I would have predicted based on what has happened with the tariffs. But I think it's clear it's an AI bubble, right? It can go on longer than we think. But my goodness. Almost a double. If you had bought the blood in the streets there, almost a double. So I wanted to put them on this chart. I used to have just Apple. I switched it out. Actually, I need to change that. I always remember when I record, I need to change the heading. Let me do it for you really quick. Let me do it for you really quick. All right. So we'll layer on the total, which is admittedly an arbitrary thing to do, but by the way, I'm still taking the 2008 trend, which is much lower, right? It's like going back from, say, here to the smooth black line. Sorry. It's like going from here to the smooth black line when I project out. Obviously, it's a big difference, right? Because the price is $4,000 and the smooth black line is $2,000. So for gold, I'm still showing the trend because I still believe it's good to show the long term trend. Obviously, we're up here where the 3 is, so you kind of just imagine, draw where my mouse is. Maybe Bitcoin doesn't pass it till 2027, maybe later, but I'm not willing to revise these trend lines yet. Same thing with available gold. But let's put the market cap of these top tech companies. Wait, why did that? Oh, I see, because I was still on it. Hold on 1 second. I just want to get it right for you. There we go. Top tech. So this is interesting. I think it makes sense. You know, if we start to just add up all the companies in the world, and these are the most valuable by far companies in the world, you know, Bitcoin can't necessarily be more valuable than all of them. Maybe more valuable than most on an individual basis, but on a group basis, you know, this is where we are. Also note the 25.8% CAGR. Like, it's just enormous what they've been doing since 2008 compared to Bitcoin. I don't want to pontificate on the idea too much, but again, this is still a question mark. Is, you know, if we get to say here, and, you know, these tech companies aren't going away, we're in a financial panopticon, everybody has to be KYC to use the internet, a lot of bad stuff. We might still be allowed to hold this digital gold, but it's sort of it's a less than ideal Bitcoin version of the future. then I think this goes exponential. And we just match, we just mirror, whatever CAGR Bitcoin happens to be on, right? Remember, it's 42% per year now, but it's falling. That's why this line is not a straight line. Then we probably just mirror, the biggest companies, and it's like digital gold. I don't think it's a bright future. On the other hand, if Bitcoin remains like fully decentralized and governments just accept that people are going to use Bitcoin, you win politically, as Peter Todd says, then we might have a little bit of this interesting phenomenon where the rest of the markets sort of bend to Bitcoin's will, to a more sustainable growth curve instead of an unsustainable exponential curve. I don't want to go too much into it because it's hard. I know it's hard for a lot of people to conceptualize, myself included. But if you're going to measure stuff in dollar terms, this is as best as I can do at the moment. I want to talk about this. Cena, very good analyst. He's talking about the quantile model here. I'm going to read this. One of the biggest errors in interpreting the quantile model is that it predicts the price. Quote, it predicts the price in the future, whereas it really just measures today's price risk by putting it against the historical backdrop. Okay, I try to say this a lot, but that's really a key point. I've gone out of my way to avoid implying price prediction and included all those price levels to indicate the model does not predict which quantile we will be at a future date. Instead, after a particular quantile is reached, it tells you the current risk level so you can judge the next action. Price prediction mindset comes from T.A. Bros and the bad education propagated by the likes of Plan B, who created an illusion of price being price oracles. So I completely agree with this take. I can explain more about why he has a smooth rainbow and I have a sort of a lumpy rainbow. I've talked about it a lot, but I'll just do it again. So here he's using percentiles. So the multiple over or under the actual power trend changes at any time. Mine stays the same. But with his, you can keep the percentiles the same, but you can't exactly know where that percentile would be in the future. You have to just sort of look at it with a band. So I think he's going out to probably year end here. Because it looks a little bit farther, although I'm not sure exactly. Yeah, he's probably going out to 2026. So with a current price of around 110, risk score 51%. I mean, it's literally you're at the 51% percentile. So you're at the median. So you just do with that what you will with the price, and then you either buy more, or you hodl, or you do nothing. Or that's the idea. Even as the price goes up, this is a much better buying opportunity than here, even though the price was also going up. Okay. And I think this is the perfect representation of the risk of where you go. Okay. It's very rare in markets for the price to just go here and then start moving over. That's why I keep talking about gold like this. You have these bands. I had a question as well from my friend Last Coin Standing. Very similar idea. All right, just talking about one of my gold videos from last week. So 2 key questions I have. If we have been below the power law trend for a while, does this increase the likelihood of us shooting higher at some point, like a ball kept underwater for so long, and the previous cycle highs, useful time markers for the likelihood of hitting those highs? If so, we do for such a move. And then number 2, to the extent we are under power law trend for a while, does that essentially raise the far out future power law channel to be lower than it was, or sorry, revise to be lower than it was before our below trend price movement. Okay, so 2 questions about the power law. I thought I might talk about it. So Sina's answer would be my answer. Okay, I really don't have any answer on any timing to this model. I do, when I talk about the timing, I just say, okay, we have these 4-year cycles. Perhaps they continue, perhaps they don't. So I presume we're still on an uptrend. In the previous years, we have been above the 90th percentile, but I don't speculate more than that. Okay, and then I just add on what Sina has said here. You know, actually here in this tweet, it's not about telling where we could go tomorrow or next week. It's just about the risk level at the moment. And I feel the same way about gold. You look at this, it's the same thing. It's the risk level at the moment. You just have to sort of make your decisions from there. By the way, this is why I subscribe to some level to trailing stops. You got to be careful. You got to think about them a lot. But you know, trailing stops are good on the way down if you give yourself enough room to play around with winning. It's very hard to understand all of that, and I wouldn't try to tell anybody what to do for sure, but I think that trailing stops can help you win over the long term if you can take the emotion out. And look, if you're going back down, then take some chips off and be able to buy back. But again, just like here, you know, gold was harder. It's harder to tell with gold than Bitcoin. With Bitcoin, it's actually quite, let's go back to the quantile. It's quite easy to see when you're in a super cheap zone, like a buy more zone. And it's quite easy to see where you've been in a hot zone. I think it's hard for everybody right now. And I've said many times it's not going to be easy. Right now, we're just on trend. We're like literally at fair value. Could we stay here and then fall back down for a little bit? Totally. We could totally do that. So back to his other question. You know, it is, I'd say, I'm always excited. Here's my curve, by the way. I'm always excited when we are above the trend line. So let's just take out all the noise. When we're above it, we're pulling it up towards the future. So every day that we're up here, we're making the future price of Bitcoin expectations a little bit higher. Not that it for sure has to be that way, but just making it a little bit better. And then here we're making it a little bit worse. That's all that the model does. So we've been sort of, I think everybody's been biting their nails during this period, waiting for the breakout, and it hasn't come. I really don't have an answer more than that. I mean, it's every time, I'm sure you've noticed if you've watched my channel long enough, every time we're above here, I'm happy. Just that we're above trend. It's a nice day. When we're below trend, yeah, we're pulling it down ever so slightly. We're pulling that black line down, what it can be in the future. Simple example, just because I have it in my head, right? You go to 2030. If you've been watching this channel long enough, you'll remember that like years ago, 2030 projection used to be up to about 600,000. Now it's 558. So it just gets pulled down. It gets tempered by the latest price action. And this is why I like tracking this stuff myself. It's because we can see every day what's our overall global change in the future of Bitcoin. Yeah, it's not as great to have a 558,000 projection in a 2030 than 600,000, but still pretty good. And still holding Bitcoin sets you up for a major black swan shock, like a revaluation of the whole world market, which could happen. Although I've said many times, I think that's a very low probability, but it could happen. So yeah, that's kind of my answers to those questions. I didn't see this. I'll check it out. I'll search for it right now. We can read about it. Hello, Cyrudon. Okay. Let me show you some accounts that do, for sure, talk about it. Um, Fred has talked about it. A lot of people have talked about it. I haven't even watched this, but Preston talking about it. Here's one. We could look at more. Hold on. Here was one from Troy Cross. He talks about it. This is from the summer. I don't talk about it as much, honestly, because it's not my forte. Right? I'm just more applied stats guy. So there definitely are people thinking about it, talking about it, holding summits, conferences about it. It's just not something that I follow as much. I think for sure, Bitcoin is it's more unique than other systems because there's no central planner, right? Whereas there is a central planner to Amazon's security system or Apple's or a large bank's security system or the CIA's security system. But that difference in and of itself, to me, is not material enough to pontificate why those systems won't also need the same solutions, right? If there's a quantum computer that can truly break Bitcoin, then it can break Bank of America. It's just that's a fact. So it might be harder, like herding cats, right? It might be harder for Bitcoin to fully prepare for it than, say, these other centralized systems. But I just don't think it's worth my time as much to write about it because I don't have as much expertise. And the arguments that I just said make perfect sense in that, I've been in Bitcoin a long time and I've heard people talk about this for a long time. If Google releases some algorithm that could break quantum or could break normal cryptography, SHA-256 or whatever, you better be sure that Google and Microsoft and Apple are all going to be ready before this new algorithm is magically released. And the grapevine is just too, what's the word? It's too easy to hear secrets and rumors that it's just, I don't see it coming out of nowhere. Could happen, I guess. Again, back to probabilities, but I don't see it coming out of nowhere where there's some quantum algorithm that can break like a lot of people's tech, but not the main players. So they become even more, it just sounds again to me a little bit more conspiracy. So yeah, I'm not as worried, I guess, as perhaps some are, but I absolutely think it's a threat, and I think people are going after it. So that's all I would say about it. Back to the strategy. Yeah. So headwinds and tailwinds. I need to. I really need to get my ETF chart ready so we can see all the different players that are coming into Bitcoin. Also versus gold, which is flying right now. I think it's just, I think Wall Street is right there. You're just gonna have to play around with the numbers and see how quickly they could adapt. But I do think this is interesting. Bitcoin can't break every metric, right? And this does point some interesting questions for the future, right? It's like Bitcoin is growing faster than these tech companies, even as fast as they're growing. That will stop right around even here. And I'll show you exactly when it will stop. Let me go to the TTM. So the growth of these tech stocks, which are just insane, and by the way, even faster than the trend, right, from 2008. Let's look at that. The actual value, which I just showed you in the other chart, 23 trillion. Trend line 19.7. So still super fast. Just give me a second. I'm pulling up this long, drawn out chart. So again, the number is a 25.8% CAGR. We can just look at how Bitcoin's CAGR is going to fall according to the power trend. All right, it's obvious it's been falling. Older players now are really realizing gains, and there's so much selling that's been absorbed in the market last year. 100K really was a magical number for a lot of people. Let's see when we go from, so we're at our 42% CAGR right now. All right, see it right there? Let's see when it gets to 25.8, exactly. Let's see when it gets there. Right there. 9 years from now. This is very, these are very interesting numbers, I think, to think about like things that could happen in the future. All right. First of all, we don't know that the tech AI boom is going to continue as fast as it has. I wouldn't count it out. Right. There's probably going to be more booms, more busts. I mean, look at the insanity of this. People say Bitcoin's volatile. Look at this. Top 8 companies went from 10 trillion to 6 trillion to 18 trillion to 12 trillion to 23 trillion. The random walk down Wall Street is more than just random. It's a hurricane. Thank you guys for the reposts. You know, all this stuff's going to play into the narrative, right? Whether it's the quantum safety or whether it's how good is AI really? How good is gold really? Are there going to be major wars? You know, stuff that I'm seriously concerned about for my family. Um, it's all going to play into it. Mm, that's interesting. I love that you bring the news. This is from October. October 22nd. Yeah, this makes me think about the. I knew the marketing guy for BitMEX that put on the. I told this story, right? The 10-year anniversary of Bitcoin, January 3rd, 2019. BitMEX basically rented out the front page of the Times. And the Times, let me actually see the picture that they put. Give me a second. Oh, okay. So all they got really was this ad. I thought they got more, but here was what they did. So they put this here. Oh, you can't see it. Hold on. They put this here on the 10-year anniversary, January 3rd, 2019, because, of course, Satoshi on the Genesis block, I presume most of you know that, embedded Chancellor on the brink of second bailout for banks, citing the Times of London. Anyway, so they hashed it and they put this message there. They wanted to do at least a price chart of Bitcoin on log scale, and the Times people rejected this idea and said it was too complicated to show a Bitcoin price on log scale to a mass media audience. So, you know, mainstream versus cutting edge stuff. You have to be careful. I don't think we need to be careful. I think a lot of people can understand that, but this is how the mainstream is thinking about some of this stuff. Yeah. So anyway, back to this. And back to the kind of the theme, I guess, of the morning is, you know, timing this stuff. When will the pump come? Again, I don't know at all. It's just a question of the risk, the relative risk where you are. And where we are right now is pretty much on trend. It's absolutely true. We're seeing some weakness again. Could we fall back to, say, this number, 80? Could we fall back to this number, 50? Yeah, we could. 50th percentile, 40th percentile. Maybe we could. It would be painful for a lot of people. It would be painful for those Bitcoin treasury companies. What's Sailor's average price? $74,000. Wait, someone tell me the difference here. Oh, it's acquisition cost in millions. So 47 billion. Right. At an average price of 74,000, 47.4 billion. They got 640,000 BTC. So they'd be hurting if they go under 74,000. Anything can happen. I'm not a TA guy. And by the way, let me go back to the Cena tweet. I saw something, actually disagreed with what he said here, because I am. So look at this. Someone right here. Do you no longer support this? This is similar to what APSK does, which I think is very good. I need to do this myself just so I can show you guys all the time. Right? You got like max and means of prior cycles relative to the power curve, right? So this is relative to the power curve. I don't know exactly what this prediction means, but it's the mean price relative to the curve at the time. And then this person asks, you no longer support this then because you're not talking about timing. And he says, this one is also comparative guide to prior cycles. You can use it to tell you what would happen if prior cycle pattern repeats, but it does not tell you whether or when, I would add, the prior pattern will actually repeat. And here he says, in fact, I now see the pattern has clearly changed. I would not say that yet. We're below. So I need to get this chart because I'm interpreting this chart different than a lot of even my fellow power law guys. Like, we're not outside of this cloud. If we were over here, then I would say it's different. But we're right here. I mean, where's APSK's chart? I mean, you guys tell me if you're looking at this differently, but I'm happy to be on record that it's not even a difficult call. I mean, I'm not going to call these cycles dead until they're actually dead. APSK is funny. His latest one. What do we say to the god of death? So this is probably the best one. I mean, he's the best at making these comparisons. So, you know, this is current price relative to current power law based on this. I know this is his main guide, is the support, which I think he's just using as 0.05 times the power law. Whatever you want to do, pick your poison. I would probably still stick with the multiples, but, you know, I can make my own. Anyway, here we are right now. It's late compared to 2017 and 2021. It is not late compared to 2013. So we still have a few more days. I don't see why everybody's so rushed to discount. You know, it could totally be nothing. As he said in a prior chart, we could just tunnel through. Like, we could be done with the cycles and we just go here. Or even down a little bit. All is totally possible. But these are pretty strong historical cycles. You know, it's fact. Why is everybody so quick to discount that we might not have a pump? We might not have a pump even as high as 2013, maybe only here. Maybe here. Maybe only to here. But we are not through the cycle. I just think it's funny that people are so quick to call it a dead, put the nail in the coffin. We're just not there yet. That's good. Let me check for it. Nice. It's good news. Nordea is a good bank. Yeah, agreed. By the way, probably better for everybody's mental health. For probably just better. If you go here on APSK is sort of, I don't know how to define this line, but this line gets to something like 170,000, 60,000. It's 160,000 by a year from now. Great. That's fine. It's fine. I'd be fine with that. I'm not calling for the cycle. I do think it's funny that everybody is discounting that we won't have it, because there is nothing on this chart that tells me it's dead. It's certainly low. It's behind, but we haven't even passed. Once we get into December, I think we'll be able to tell. January for sure. And as I keep saying, it's not easy, right? Like, what if we get into January and all of a sudden we have a little drop? What if we go back here? I mean, the market will freak out. Bitcoin will be declared dead for the 50,000th time. Let's see how. I always like good charts. Oh, it's on TradingView, huh? Let's see if I can find it. I'm such a juvenile in TradingView. I see their chart on their website. Oh, here we go. I'm linking it. Is this a live chart? What is this? No, it's not a live chart. Open source script, that's cool. Does anyone see a later? So this is what you're talking about. Slonic. I do not see one later than this, but this is cool that it says open source script, so I'll definitely try to implement it. And I wonder what they are taking, to get this number. Okay, this isn't it. I don't see these as being updated since 2023. All right, I'll go back. Just do it on their website. Oh, wow. They have a lot of cool charts. I presume you guys would like to see me put up charts like this. This is cool. It's like fully integrated with TradingView, huh? That's not a bad It's not a bad model, I guess, to do this. Anyway, here we go. The intrinsic value of Bitcoin as priced by raw joules of electricity into the mining network only. So it's the supply growth rate. So it's relative to the Bitcoin supply growth rate. I understand that. Energy input is hash times mining energy efficiency. How did they get this number? Efficiency rates, front of yeah, so Cambridge did one, Bitcoin Wiki. They collated a lot. That's cool. Very cool. I'll have to read about it, and I'll have to look into this site as well. I haven't even looked at this. This is a beautifully integrated site with TradingView, so I can imagine. Still calling it the Mayer multiple. This is the 200-day Mayer multiples here. It's the price versus the 200-day moving average, simply. I used to have this on my website as well, but it's nice to do these little models like this and just not necessarily reinvent the wheel like I have with a lot of my charts, but I thought about this a lot in earlier years. They don't have, actually, they maxed it out. I'd like to even go back further, but in 2013 it was even higher. All right, so you went from a 3.6x, the 200-day moving average. 2019 kissed it, then 2.8 in the two tops in 2020. Actually, no, in the first top of 2021. Just like my PSR, it catches the first top. And then here, we're nowhere close. So yeah, we're on the 200-day moving average. So again, whether that goes even lower, I have no idea. But it's not, we're certainly not in overvalued territory. Minor sell pressure. Also cool. Not a lot of sell pressure at the moment, but there certainly was at the beginning, especially with the ETF push. Lots of good stuff here. I want to show you guys this merged on with my miner production revenue. And I don't have this chart ready for today. I do want to get it made. And I'll do it with platinum and palladium, by the way, for those earlier questions. so here we have, so electrical costs, production cost. Yeah, it's very interesting. I wonder how amenable they are to just sharing some of these indicators. Notice how it keeps growing. All right. Like I don't necessarily see great topping indicators here. It's just sort of interesting that it keeps growing, right? I guess this one was kind of nice when you clearly extend the actual price versus the cost. But we're not even close to doing that, so it reaffirms everything I've been saying. This number to me is like one of the best as far as just showing how small the market is relative to anything else. Okay, so again, we can just look at daily. All right, and obviously it spikes during booms, but this is daily revenue. Okay, so block reward plus fees turned into dollars at whatever the price is. We went from 55 million as a top daily revenue in 2017. Now we're on average or normally the same value. All right, on average, basically. And really haven't got too far above it except for a couple days. Why can't I get there? 60, 70 million. But if you roll that over a trailing 12-month basis, and you really can see the overall trends, okay, again, we're always moving higher. Just like here, if the cost moves higher, revenue is also going higher. You can see the power of the halving itself sort of saws off the revenue for a while, and then we go higher. But this number, $17 billion, that's so small compared to gold, compared to oil. We're just above the high from 2022. This is a trailing number, so this is not a number to tell us the top. But this is just cruising along. This chart actually tells me the most that the 4-year cycle could be over, because this just keeps growing. You know, never discount a crazy pump based on just market hysterics. I think it's totally possible we get one. But if you see relative to prior cycles, first of all, it keeps going up for a while because it's trailing 12 months. So that's why it's sometimes better to look at 30-day, trailing 30-day. And we're elevated, but we're not, popping. $1.5 billion for the Bitcoin network miners every 30 days. The gold market is like, well, it's $400 billion right now, trailing 12 months. So Bitcoin, let's take the daily off. Bitcoin, trailing year, 18 billion. The gold market is 20 times higher than that. 400 billion. So super early. Are you saying that Bitcoin top with the question mark, meaning that you expect the top to move into next year? I think that's obviously totally possible as well. And this chart shows it, right? I mean, we're still gearing up on this. It does, again, it doesn't have to exactly repeat, but the 2022 overall mining top was 17 billion, which was 10 billion higher than 2018. And 2018 being 7 billion, the top, that was about 7 billion, 6 billion higher than 2014. So these factors, of course, get smaller as we get bigger, like power law, proportional stuff, but it still get way bigger. So I'd be very surprised if we do have a cycle, that this cycle does not top out, I don't know, 5 times higher. Mining revenue being 5 times higher than it was in the prior cycle. So a lot of things that suggest higher for longer to me. Yeah. Yeah. Yeah, that's what I'm seeing. I'm also try to be cognizant that I'm not one of these like doom and gloomers, but saying that, because they print, then Bitcoin's going to 1 million or whatever. Right? So, but it is true that it's, it's gasoline on the fire. If we revisit the central bank, Federal Reserve money printing versus the debt, we hit 38 trillion, by the way. Did you guys know that? We hit 38 trillion. So, zoom in. 38.1 trillion as of month end, last month. I think I may be a day off there. There might be new data printed today for whatever, October 31st. Fed holds 6.27 trillion of that 38 billion. Okay. There's the percentage. So it's wacky, it's managed, it's centrally planned. But there's plenty of room to go higher. Right? In November 2021, they held 28% of the federal debt. Now, 16.5%. And we know what's coming. We know it's going higher. What do you mean? Here's another thing why I don't necessarily buy the crack up boom argument. All comes back to the trend. And I have to just keep reminding people. Is the trend line growth of the debt. So we're way off this one, including all the 1800 debts and paying off the debt in the Jackson era. We're way below that. Civil War debt, boom, here. We're below that. But we're above that. We're above that. But we are below the prior, like 2 different epochs of the prior 100 years. 100 years ago, the debt was growing much faster. Here's the 1914 to 1971 trend. Okay. We're slower than that right now. If we were growing at the rate that, Roosevelt was growing the federal debt, we'd be at an 8.2% CAGR. We're only at a 7.2% CAGR. Same with the Nixon era. That was even faster. 9.5% CAGR. Current trend lines are actually lower. Even though the compounding gives us crazy numbers, these rates are lower, reflective of the low interest rate environment that we've been in. Now, again, I'm not saying that everything is honky-dory and we're good to go. Of course not. This is still a lot of debt, but does it mean the whole thing collapses? I think there are worse signs than this. Hello, sir. Yeah. It's unbelievable. It is unbelievable how fast it is. This is monthly. I mean, even if you look at when we were at 36 trillion, right there, a year ago. So over the course of a year, we put on 2 trillion, and that's going to continue, as we know, at least $2 trillion deficits a year. You guys know I talk a lot about the dollar being the best looking horse in the glue factory. I think that's still true. If you're an investor, other than Bitcoin, other than gold, are you going to buy Chinese yuan denominated Russian bonds? Have we talked about this yet? I don't think we have. Here's one. Jake Bro's got a good headline on it. This is just hilarious. I'm sorry, but this is just... Russia is now issuing new government debt in Chinese yuan. Russia's currency is so terrible that their government is giving up on it and accepting their fate as being China's vassal state. And it's true. What an embarrassment for Putin. These guys just ruin the lives of Ukrainians. They don't help their own state. Go home, fix your own state. Only 2 in 5 of you don't have a toilet. And now they're issuing government debt in Chinese yuan. I mean, it doesn't get more embarrassing for Russia. And they're going to force those Russian businesses to invest, right? I mean, that's war debt that the government needs to sell. So nobody has any money in Russia except for a few privileged state companies who are also running out of money because they don't, at least finally Trump put some sanctions on Rosneft and Lukoil. But you're going to have Russian companies buying yuan denominated debt. What a joke of a society. Oh, they haven't forgotten. They have not forgotten. They're just going to wait for the right time. Chinese would prefer not to. Actually, there's another good YouTuber, Paul Warburg, who is related, as far as I know, to the Warburg family. He put out a video. Is he on Twitter? He may not be on Twitter. He's a YouTuber. He put out a video, which I think is a good point, talking about how China, because of the failures that Russia has had in Ukraine, being the second largest, quote unquote, second greatest military in the world, and just the abysmal failure. I mean, they can't, they might finally get Pokrovsk, but it's been a year and a half behind schedule, sending dirt bikes and, Siberians to their death. because of their absolutely embarrassing, pitiful, tremendous, and just self-destructive performance, China's learning from this, right? So it's possible that China is also an underwhelming military. It's possible because China hasn't given Russia all of their kit. All right, China could help Russia more than they are. They are helping a lot, and they actually love this war for sure. But China is, it's possible China is learning that, you know, the peaceful route is going to be the better route, which is true. I mean, war only destroys. There's no economic growth in war. There is growth for certain sectors of an economy, but that it's destruction. War is destruction. So it's possible that China would not ever want to get in a hot war, even with Russia, to reclaim their lands, which they rightfully have title to, depending on your perspective. It's possible that they will not, they might not even go for Taiwan. They may just blockade Taiwan. We're just going to have to see. But it's possible that China's kit could be as underwhelming as Russia's. Now, I say that with a huge grain of salt. Like, we know China is actually a superpower. Russia's not a superpower. But these are all things that we're going to start to find out. So credit to Paul Warburg. If you guys don't follow him on YouTube, he's a very good YouTuber. If you're pro-Ukrainian peace and freedom, as I am. Mm. What would trigger the dip in this scenario? I agree with everything else. I'm just wondering what would trigger the dip. Because it's true. I mean, gold was our old barometer. And it's true. QE started here. Actually, it started about here. And gold did dip, but very briefly. Like a month, gold dipped. And then it went higher. So if you just mean, the shock, the economic collapse, and then the remonetization of money to paper over the losses, then yeah, I agree. It's totally possible that could happen again. But this is a great way to say it, by the way. There's never going to be enough dollars to satisfy the debt. The debt's going to continue to grow compoundingly. And if they would let the debt ever be repaid, there would be a collapse in the system, because it's just not how compound growth works. Which is why Bitcoin is so counterintuitive. Bitcoin is different. Where's my chart? So even gold. Gold inflates. All right. This is a key point. This is why I'm not rewriting this trend line yet, even though I know we're way higher, like unbelievably higher, 10 trillion higher on the trend, because gold's having its moment in the sun. And again, just follow my mouse, not the number 2, but my mouse, which is like at the top of number 2 now. It's possible it takes longer for Bitcoin to pass, like maybe 2035 instead of 2033, right? It's possible we stay a little bit elevated, or we set a new trend. I think unlikely. But the reason that I'm so confident in Bitcoin's rise relative to gold's rise is that there's 100 million ounces of gold coming out of the ground every year. And right now that's worth $400 billion a year. And so, as I talked about at the beginning of the episode, right, like the cure for high prices is high prices. Tom, Dick, and Harry. That was what I forgot it for. It's going to be every Tom, Dick, and Harry chasing gold now. A lot of jokers. Yes, there are going to be some mines that are unprofitable before that now are profitable at these prices that will be reopened and will satisfy some gold supply fabrication demand. That is the demand to produce it. But after some time, people will be wondering, why am I paying this price? Right? We have all these suppliers. We have every Tom, Dick, and Harry mining gold. Why would I keep paying this price for that gold? Bitcoin does not have that problem. Bitcoin is a constrained, fixed supply. So they're two fundamentally different assets. That's why I'm, again, not 100% confident, but maybe 95% confident this Peter Schiff curve is just going to turn around. It could go for 2 years, 2 more years, but it's just not going to stay there. It's going to bounce off at some point. Yeah. Well, it's yen carry trade. I don't know how long that even lasted, right? Most people don't even think about it. It's true. Some yen was reshored. Dollar's still the best looking horse in the glue factory. So no, I mean I agree with your premise. Like all the other systems are also based on unsustainable compound interest of fiat units. So I agree with you. I agree with the premise. How exactly that will work for Bitcoin in the short term, if it ever happens, I think it probably, like everything, will go down. We see gold, like this was the worst of the worst right here. Gold was down in '08, and then by January of '09, it was. Oh, this is available gold. Let me just show you the price. So it was down. It was 975. 975 in March '08. By November, it was 737, but then it was back up. So I would just imagine the same thing for Bitcoin. Like if we had a true global crisis again, it's really the only thing I can judge it on is a sound, slightly non-correlated asset, sound money asset. And we know the playbook is the same. Let me show you the Fed's balance sheet. Well, actually, let me just show you relative to the debt. So this is basically the Fed's balance sheet. It's basically the monetary base, but so they're going to go back up, right? I know I do need to show you the trend line. I'll show you the trend line. So percentage-wise, we're in a seriously low area for like recent history. Like we're never coming back to these days. Also, notice how they kind of let the market work a little bit here. Even though it was controlled, like you at least had some movement. But from the .com, you can see Greenspan starts to intervene a lot more predictably. These were the lowest interest rates ever, by the way, until the crisis. And then once the crisis hit, okay, bail out Wall Street. They swap out government bonds for corporate bonds at this moment. Then they put all the guarantees in, so they took them back on. Plus, they took on worse debt. And then you just get this smooth line. I'm talking about like the little frequencies. Like you don't have these little blips and dips. It's really funny. It's a totally different monetary epoch that we're in. So yeah, we know what they're going to do. We know it. Just without a shadow of a doubt, if there is a crisis, they will print more and buy more bonds. And going back to this chart, which is the Fed's balance sheet trend lines, okay? Interestingly, we were above this 1971 trend. Very similar to the 1914 trend. But regardless, you know, the world that we're living in right now is this trend line. And we're below trend. And it's not going to stay that way. I'm convinced that it will go higher. This is the Jeffrey West super exponential formula. Eventually, we'll go higher. So I don't really think about that stuff that much, to be honest. I mean, it's good. It's a good question what you're talking about. Yeah, I completely agree. Everybody knows that everybody's too indebted to take the pain. They need that morphine, adrenaline shot to keep going. So it's like everybody knows it. It's not a surprise to anyone. It's like when this was coming, right? First of all, we see that the market wasn't healthy because they had to start reflating here. When they had the repo spike happened right here, September 19. This was before everyone really knew what was happening in China. But of course, once people figured it out, it was off to the races. Like they didn't think twice. And I'm not even like making a moral judgment here. I'm just saying this is what they're going to do. It's what they're going to do. They're not going back to a $1 trillion balance sheet. They're never going back to this trend, by the way. This is how all the economists cut their teeth. Now we got this weird looking balance sheet that's just... Trend line should be 3 trillion. We're at 6.6 and going higher. Already stated by December. I do find it interesting they even compressed here. Like before the crisis was full blown, right? And our economic overlords from what is it, the NBER, National Bureau of Economic Research, said the recession officially started somewhere in like 2007. It just took a little bit of Fed tightening, that is, you know, shrinking the balance sheet off the trend line to push in. It's not the only factor, but it's funny that leading up to the crisis, what did you see? You didn't see an expansion of the balance sheet relative to the trend. You saw a contraction of the balance sheet relative to the trend, right? I'm talking about right here. Only 60 billion under. 60 billion. Here's close to $1 trillion. Not $1 trillion, 100 billion. Here's close to 100 billion under. And then they took off. Helicopter Ben. So that's the thesis, I guess, of this whole episode here. Follow the trend. You know, they told you Bitcoin was volatile. Look at the market cap at the top 8 tech stocks. crazy. I guess I need to do some individual volatility tracking, don't I? I mean, this is as crazy as any Bitcoin drop, right? $11 trillion in tech market cap down to 6.5 in 2 years. And then up to 18, down to 14 during Liberation Day, then back up to 23. It's wild. I think that's all I have for you guys today. Unless anybody wants to see anything else. You know, gold is interestingly tracking the AI boom better than Bitcoin. How long does it last? I don't know. But AI boom starts here. And gold tracked it perfectly. Very interesting. 41, 42% CAGR is the growth of gold, available gold. As I said at the top of the show, this could continue on for another year, another 2 years. I have no idea. But supply and demand will take hold at some point. At some point, consumers are going to start to ask and actually demand, why am I paying this much for the same rock that, I had 3 years ago for $1,500 an ounce? Because it's not a scarce asset. It still grows at 1.8% per year. But this is the Peter Schiff chart. This is what Peter Schiff would love to see. And it just doesn't make sense after some time. Is gold going to be by 2030 a $135 trillion market? Possible, but I don't think so. I think it's going to be much closer to that number one line, $17 trillion market. Maybe 20. Maybe the red line. Maybe it gets up to 40 and somehow stays there. And this doesn't go up forever either. This is super frothy. I'll try to get some relative metrics soon to show how frothy this actually looks, but pretty wild. All right, guys. I think that's going to be it for me today. Happy Monday. Have a great week. I'll be here tomorrow with more charts, more new charts. Thank you very much, Slonic, for these, by the way. This is interesting. Have not checked out their website. It's a good model. Plugging into TradingView, I must admit. So, yeah. We'll see. I know a lot of you want to see more charts on my site, so you don't have to watch the videos, but I'll get there. Thank you guys. Slonic Geo 21. All right. Have a good week. See you tomorrow.